Hey there, it's Les Sulgrove, Simply Des Moines Market Values. It's the end of the month and end of the quarter review show this week. We're 6 days into October, and I think we've got quite a bit to talk about as far as what happened into September. So let's jump right in. Can you believe it's already week 40 in 2024? I mean, in some respects, this year has just dragged, in other respects, it's just flown by. So Um, there's that old saying you see, or that wording you see on your side rear view mirrors on your car when you get in. It says objects may appear larger uh, than they seem in the mirror, and I think that's true with real estate market stats. There's a lot of market information out there that really probably should look larger than it really does on the surface. So let's take a quick look at monthly and quarterly review of the month of September and the third quarter of 2024. So let's jump right in here. Let's see, I dropped my picture out for this for just a second here so we can kind of see this whole graphic here. So we're going to start this week's show and this month's show with a graphic of the Metro. We're going to focus on the Metro and kind of move our way out here. This is a graphic as well as, by the way, there are 60 graphics this week in this week's show, and I've enhanced the Des Moines Market Values homepage. If you go to the graphics page, I put descriptions of each week's show on there as well on for each week, so you kind of have an idea of which week if you want to go back and look at old shows. That's just a little side there. Anyway, let's look at the metropolitan area of the Central Iowa real estate market here. And what we have, if you've seen this graphic before, you kind of know how this works. We have the pricing in $100,000 increments across the top, and down the side we have the different local metro communities. And Des Moines, of course, is broken down into Des Moines southeast, southwest, northeast, northwest, and Des Moines downtown, and then east and west as well. And so this kind of gives you an idea of where we are in the metro, where all the inventory is, and obviously, zero to $100,000 price point, we have virtually no inventory. There's 11 houses on the market as of the end of September, and that's pretty sad. We need more inventory in that particular category so we can kind of feed the move up buyers market, because really right now, if you're a first time home buyer, you have to jump in at that 100 to $200,000 price point, and that could be tough to be done here once in a while for some home buyers. So anyway, what we're doing here is we're going to kind of rank the three price categories that have the most inventory. And up here at the top, number one, we have that $300,000 to $400,000 price point. We have 851 homes on the market currently at the end of September. That's that crossover point where we have new construction as well as a lot of resale properties. So at number two, 581 homes on the market. Again, you'll see some new construction starting in that $200,000 to $300,000 price point as well in that upper twos. The number three price point where we have the most inventory after that is that 400 to 500. So it's kind of clustered really between $200,000 and $500,000 pricing in that area. The three communities that are kind of leading the way, obviously Ankeny kind of always seems to come in number one right there with 414 homes for sale across the board with all the price points. And again, you can kind of see if you follow that across where the bulk of their inventory is in these different price points. 143 homes for sale for Ankeny. Waukee coming in number two, no surprise there. But kind of a surprise here, Urbandale has been coming back here in the last couple of months. Urbandale right now has the third spot for number of homes for sale at 290. They edged out West Des Moines, so they're kind of close, but neck and neck. But I'm only rewarding the first three categories here. So one, two, three is Ankeny, Waukee, and Urbandale. If we look at this same data from a sale pending standpoint, these are the number of homes that are under contract in these different price points. And again, the same thing applies, except now it's looking at pending sales. Again, that $300,000 to $400,000 price point is now the number one price point. We've got more homes under contract in that price point Number two is the 200 to 300, number three under 100 to $200,000 price point. So again, that same cluster just arranged a little bit differently. Instead of one, two, three, it's one, two, three backwards here. As far as the metro leaders, again, Ankeny's number one there with 243 homes going under contract. And this time, Urbandale, like I said, Urbandale's kind of on the making a run for second and third, second place here. They outpaced Waukee in the number of homes under contract with 147, and Waukee comes in third at 127. And again, yes, West Des Moines is there at 118. Surprisingly, in triple digits here, we do have Des Moines Northwest, which is, the Merle Hay area, the Beaverdale area. There is still very, very popular. 120 homes currently under contract in that price point there. So, all right, well, let's kind of take that same one, two, three theme here and apply this now, this $100,000 increments. Let's apply this to the number of homes versus the number of homes under contract for the entire MLS, for the Des Moines Area Association of Realtors MLS. And a little different story to some extent. I mean, there's still those same three kind of price points there. 1,090 homes for sale currently on the market between $300,000 and $400,000 in the entire multiple listing service for Des Moines, Central Iowa area. Number two is under that $300,000 to $200,000 price point, which is good to see. We'd like to see that number and these two sections down all the way down to under 100,000 kind of build up. But a newcomer here, we have more homes on the market between $400,000 and $500,000 when we get into the outside of the metro area. So there's quite a bit of activity out there still in the mid and upper price points there. Your sale pendings are still between $100,000 and $400,000. So how does this look again? Looking at months of inventory, nothing that we wouldn't expect this time of year. That lower price point is a seller's market, up to $300,000. $300,000 to $700,000 is a balanced market, which is pretty common this time of year. Again, a balanced market is between 4 and 6 months of inventory, which means that if no new homes came on the market, it would take between 4 and 6 months to sell out of all the homes on the market. And obviously, we're always replacing inventory. Once you get above the $700,000 price point, it's predominantly a buyer's market with a little surprise there. $800,000 to $900,000 price point is still a seller's market. Now, if you remember, I don't know if I can go back or not. Yeah, right here, you notice there's 59 homes for sale in that $800,000 to $900,000 price point. Do pay attention here. 900 to a million is 36, but if we go forward now. With the fewer homes for sale, there are still buyers out there buying at a faster pace in that $800,000 to $900,000 price point, and then the 900 to a million with even fewer listings. Those buyers are just really kind of slowing down a little bit. So that's why that inventory is rising. Granted, there's lower numbers, so a few sales here or there is going to kind of affect that. But just thought that was interesting that we've seen. Seller's market, balanced market, and then buyer's market when you get over to the right-hand side with that exception right here. As far as end of quarter inventory levels, I've done a little something different here. We're looking at trending by quarter, and you can see that the little plus, minus, minus here, we increased this quarter our inventory over the previous quarter, which is what we like to see, and we're good and we're glad to see that. However, traditionally we start to see this kind of come down as we move towards third and fourth quarter. So we have seen inventory rise all year. So really no surprise that we've seen an increase there. And we're also seeing pending sales, the count of pending sales also be down a little bit versus last quarter and even the prior quarter to that. So our, let's see if I can do this the right direction. Our pending inventory counts are going down as we move towards fourth quarter. We would like to see this one jump up here fourth quarter with that lower interest rates coming into play. And then of course the one we really are struggling with this year, because pendings are down, we're also seeing closed sale counts come down just a little bit as well. So we're still behind last year. We'll talk about that in a second. As far as pricing, this same application here, third quarter, our pricing has came down. It went up second quarter from first quarter, and then it's down to 361, and 314.9 is our median list or median price at sale pending, which is pretty darn close to where we were the last quarter. Again, this is kind of being propped up by that lower mortgage interest rates and home buyers feeling like they can maybe get out there and spend some money. And but you know, closed sale counts, which is a product of probably 30 to 60 or maybe even 90 days back or longer with new construction in the mix, we're seeing closed sale pricing actually come down, which for a home buyer, that's a good sign. That means that, you know, the homes, you know, the homes that are being bought out there are a little bit lower price point, and you know, maybe they're getting a little bit better of a negotiation package there. So one of the things that really frustrates me is when I hear the media talk about affordability, and they tend to always talk about what home prices, what sellers are asking for home prices. You know, they go out there, they say, the median list price of a home out there in our market, for example, is $361,000. That makes it tough for a home buyer to afford a home, when in reality they need to be talking about you know, focusing on the pending and closed sale prices. All this number represents up here at $361,000 is what the home sellers are asking. It's what they would like to get out of their homes. Where the rubber meets the road, it starts right here at the sale pending number at 314,945, and then the actual closed sale, which again, this 294,9 is lower. It has a lot to do with sales that happened back in this period of time. Um, you know, if they would focus on uh, equating affordability with pending or closed sales, they would be more of a true reflection of the market. And I will tell you, this graphic here, if you you know, I just created this one this weekend, put this one together. I like what it shows. I like the story it tells on a monthly basis. I do this graphic going back, I think, to 2006, but then it's all over the place. But this is a nice one to compare just year to date here. So I will continue to add this one into my mix now each month as we move forward here. As far as next month, I really feel like next month's going to tell the tale of where inventory levels are going to go. What you can see is really in this first quarter, we saw an increase in inventory, which is pretty typical. Second quarter, you know, it kind of peaked around May and then started to drop down again as we go through the end of summer or the beginning of summer market. So spring market, summer market. And we have continued to see inventory levels kind of rise as we move towards the third, you know, through the third quarter as we move toward the end of the year here. So these are the number of homes that were added, excuse me, added to the market each month. So we had 1,106 homes that were added to the market as new listings in the month of September. And that's a nice number there. I mean, it would be great to see this go up because more homeowners are coming on the market, but a lot of these number rises are due to the fact that we have a slower pace of sales. But when we can see these actual number of homes coming on the market increase, that's going to really make a difference, I think, in the buyer uh, ability out there to feel like they have homes that they can buy. So this is an actual number of homes that came on the market. So that's a good sign that's going up. Now, what do I mean by the next month that is going to tell the tale? Well, you can see that traditionally fourth quarter, we see a little bit of a drop of new homes added to the market, and then into October and November, and then December is kind of the month where we don't see it. Will the drop in mortgage interest rates, as long as they stay close to where they are, we did go up just a tad this past week, but nothing really major. But if the market is truly driven by mortgage interest rates and maybe the economy and the election, you know, maybe we will continue to see continued rise of homes for sale. And if this number continues to go up, that's a good sign. So again, there's that out of the gate rising by March, spring, early summer market rise, rise, drop. That's what it did. And then steady rise into the early fall market here. So if we apply what's going to happen in fourth quarter, you know, this is what we've done not only last year, but the last 2 years prior to that. So just face it, December is not going to be a very good month for adding new listings to the market. That's just very typical. But there's hope that we can outpace October and November with this newly added inventory. So if you have people out there that are thinking about selling, that are thinking this is the time to get in the market. This is where this is going to show up, and this is where it's going to make the most difference. So, as far as the pending sales, there's those same three categories early on out of the gate: spring early and summer early markets. We kind of tend to see. Look at this. We've got 3 months up, 3 months down, and then 2 months down, and just actually three down, but it's just barely down. So for all practical purposes, I would say that our pendings per month have leveled off. And again, more sales kind of coming in this last month of September with the drop in interest rates is kind of driving that. It would be fantastic if we were to hit 1,100 or 1,200 homes under contract in the month of October. That would make a strong statement right there. Will it happen? Probably not, but boy, I tell you, that'd be fantastic if it did. So let's kind of watch that. Again, you can see the year-end trending the last couple of years here. This was 3 years ago. But the last couple of years, the trending says it's going to come down. So even if we come straight across and continue this flat trending, that's still a win in my book as we move into the October, November. So I think it's really all going to depend on kind of what happens with rates. Like I said, they kind of came down, and then just this past week went up just a tick, but not very much. And really, how much is the election going to affect things? We'll find out here. So. Closed sales per month, again, rise through May. Closed sales, have fallen off. I think that, we anticipate if things continue the way they are, we might see this level off or drop a little bit. But what we've got here is to look at this from a different perspective altogether here. The little plus, plus, plus all the way down to um, what was that, June. Through June, we were ahead of closed sales at the end of each month, and by a pretty good clip there at the end of June. It was in July when the market really kind of stalled out. And again, these are closed sales that occurred about 30 to 60 days back. So what was happening in March and April and June were really why we saw the closed sales kind of drop off here in July, because these are recorded sales from previous activity. And we've continued now to kind of fall behind, um, at the end of the month numbers here. We did cross the 10,000 closed sale number, I think, October 1st. So it was right after the end of the month. So at the end of the month, we were at 9819, and then we crossed over 10,000, which in the month we always have a pretty good boost there. But I think that we're going to, probably going to continue to lag behind a little bit unless those pending sales come up there. So other two more factors here that we're going to look at and kind of watch as we move forward here: the price increases and reductions. We continue to see price reductions at a higher pace. 1,681 homes went under contract, or I'm sorry, under contract, had price reductions the month of September, and even fewer homes had price increases in the month of September. And the black line indicates where it was in the previous year as far as reductions. So we're well ahead of last year. I think we're going to continue to see that as home sellers finally kind of understand that they need to make sure that pricing is appropriate. No longer, as we get into the end of the year, can they kind of price it and hope there. So um, back on market versus and percentage by month. We're seeing we're kind of back to our what we consider our normal levels. 18-19% is our normal back on market rate, our bomb rate, and we were at 20% at the end of September with 209 homes sales that fell apart. This is an opportunity. Every time a home sale falls apart, that's an opportunity for a home buyer that maybe has had seen that property before, and for whatever reason, whether it was inspection, financing, appraisal, whatever, maybe that's the opportunity to get back in there and get that. So don't ignore those pending sales if you're out there watching homes for sale. There's a good uh, chance that some of those are going to come back onto the market and maybe give you an opportunity to go back and get those. So. All right, well, that's the show. I do want to remind you, I alluded to this earlier. I the download show graphics. I've totally updated that. I added better descriptions for each week's show, so you know which show maybe you want to go back and review. And this particular week's show, I have 60 graphics. You only saw a handful of graphics this week in the show today, but I have 60 of additional graphics that you can go back and get. Plus, if you remember, I've moved all the graphics back over here to United States servers, so you shouldn't be blocked when you go in and from your firewalls, or maybe you're at work, you should not be blocked anymore. It should be able to be found. That's all found at DesMoinesMarketValues.com. And again, thank you for watching. All this information can be found at DesMoinesMarketValues.com. Be sure while you're there, hit the subscribe button if you're on the YouTube channel and hit that notification bell. Love to increase the traffic on the YouTube channel even more, but you'll find all the shows at various places on social media. So thanks again for joining me this week. We will talk to you all again next week. Get out there and sell houses and be safe. Talk to you soon.